Is it a seller's market? Is it a buyer's market? Is it a continuation of a buyer's market? How's inflation doing? What are rates doing? Are they going up? Are they going down? This and more. Welcome to your August market update. I'm your host, Singh.
And I'm your host, David Muraoka. So, Sonny, let's get right into it. What's going on with rates right now?
Man, I'm glad you asked. There's a lot of false media news happening right now. And it's maybe not the media's fault because this has been their history. They usually report on things 2 to 4 weeks delayed. So right now, just to give you an example, if you look up interest rates, if you just go on Google and say interest rates right now or mortgage rates right now, 30-year fix, 15-year fix, whatever, you'll see bank rate, you'll see Zillow, you'll see Zillow Marketplace, you'll see Fannie Mae, Freddie Mac, national average. And that's a safe way to be able to publicize an interest rate and remain in compliance. So I get what they're doing, but you'll see a traditional interest rate right now in the end of August while we're shooting this in the upper sixes. And that's deceiving because a consumer will see it because it's delayed information. And a consumer will see it and they'll say, oh man, they're almost 7%. Oh, not today. Okay. But in reality, what's happening is numbers came out in early August. Inflation is getting tackled down. I don't know how it's getting tackled down, but somehow inflation is getting tackled down. This is right under the noses of the Feds. So there most likely will be teed up for Fed interest rate cut in September. Again, the Fed funds rate doesn't have anything to do with mortgage interest rates. But when we see something like this happen, an improvement in inflation, which is the whole reason why our Fed chairman told us all these years that we need to strategically price interest rates up to ward off inflation. We need to bring down and cool things down. What is the logic behind that, by the way? Well, I'll explain it to you. If the value of this iPhone is $2,000, okay, but now I go ahead and drop it to $1,000. So I bring down the price of this cost of this good. Then more consumers can purchase it freely. More consumers can purchase and buy it and afford to buy it. Well, the thought process is the same with increasing mortgages. That'll cool down this rapidly crazy going ever since the COVID, ever since the end of 19, if you think about it. Real estate market, especially in our Sac Valley, California wide, look at all the appreciation you had, false appreciation you had. Houses almost doubled. Let's cool that down with higher interest rates. David, you know what's happening right now with rates? I'm going to say this in the easiest way I can say it without getting in trouble. If you have perfect credit, 740 credit score, 20% down. And no, I'm not trying to bait and switch or dangle any carrots in front of anybody. I'm just trying to make it easy so that people can understand. You have income that qualifies. You have 2 years on the job, yada, yada, yada. You meet all the bells and whistles, approval, eligible for a conventional loan. You're in the upper fives right now on a 30-year. No points. On an FHA, I was locking someone in the upper fours this week. So imagine what's happening right now. You have sellers and buyers who are not in the market. You have sellers in the market, on the market, houses for sale. And then you have buyers who are not in the market, but kind of are keeping their ears, out there to see if they should, start working with the realtor, start touring and caravanning homes. They're like looking at the internet because they don't want to talk to anybody. Everyone's got social anxiety disorder, right? They're like, dude, rates are 6%, 7%. I'm not touching that. But real buyers that are in the market working with a professional, and I'm encouraging you to do so, that are getting text alerts, that are getting email alerts saying, here's what rates are doing specifically for you this week. And they're seeing that, oh my God, they're not in the upper sixes, they're in the upper fours. They're able to now dupe that seller who has misinformation, get a heavier seller credit, and buy the rate down even further. So that springs up their purchasing power. That allows them to afford way more. I'm glad you asked me that because there's a lot of confusion going on right now with what rates are doing. They're trending lower right now because our country's doing well right now. Look at the stock market. And in addition to that, the bond market's doing well. And if you want it even in more layman's terms, inflation has gotten a little bit under control, enough to where the Fed is likely feeling comfortable enough to go ahead and start reducing rates. And that's having a good, touchy-feely good moment for, the mortgage market. David, now that we've talked about that, there's a lot of confusion right now on what's going on in the real estate market. Can you touch upon if this is a seller's market, a neutral market, a buyer's market, and who should be what should we be doing right now?
Well, I'm glad that you talked about the interest rates being lower than what the media is saying, because what I've seen in the past 3 months is that there's more listings coming on the market, more sales, but we're seeing that uptick in pending sales, so that people that are really talking to their real estate agent and their mortgage lender, they're knowing that, hey, we can get a really good deal right now because there's more options out there, and sellers are a little scared. They're saying, they're getting that information that, oh my gosh, it's a buyer's market. I've got to do whatever I can to incentivize the buyer. So let me offer them a credit. Let me lower the price. So buyers that are really in tune with their agents and their lenders are taking advantage of that. So that's why we're seeing that uptick in pending sales.
I couldn't agree more with you, right? So what David is saying right now in a layman's terms is sellers started to get they started to feel it. They couldn't sell their homes like they once upon a time were doing these last few years, right, Matt? Like, oh, here's the signs in the ground, 10 offers. Oh, man, right? That's not happening anymore. So now it's going to 30 to 35 days on the market before you get an offer, receive an offer. So that freaks sellers out that want an instantaneous or have been accustomed to an instantaneous return on putting a house on the market. So now they're getting more creative. Hey, we'll list our house. We'll also include a seller credit up front. So if you put an offer on our house, this is also, by the way, coming with $10,000, $15,000, whatever it is, just like the builders have been doing for the last couple of years. Now that you have that going on right now, in conjunction with they're still kind of not really being fully educated on what rates are doing. They think rates are still higher, okay? What are your buyers doing right now to kind of capitalize on this?
What they're doing is they're really asking for that credit to do a 2-1 buy down or just do a permanent rate buy down. So that's what we're informing them about, what their payment savings are going to be monthly on the rate buy down. And that's really causing them to say, hey, you know what, let's take advantage of this market. Let's go ahead and buy right now. We have a lot to choose from. So, let's.
A lot of realtors, like what you're saying isn't new news, right? Mm-hmm. Can you offer one strategy to anybody watching this right now that might be like, hey, you know what, I do want to buy a house, or my son or daughter might want to buy a house. Every realtor is saying, oh yeah, sellers are hurting buyer's market, right? But that's not all the case in every market. Like I had a buyer hit me up and he's like, I'm all cash. Mm-hmm. Can your real estate brokerage represent us? Can David represent us in Brentwood, California? Brentwood, Discovery Bay, Oakley, that, up Vasco Road. Mm-hmm. It's like the new Livermore safe haven. Yeah. Like all of this, Mission, Fremont, Union City money, San Jose money, tech money came in and kind of took over Dublin, Pleasanton, and Livermore. So a lot of former Livermoreans, I'm a former Livermorean, right? Not Livermorean, Livermorean, okay? We moved up to like Brentwood. Like that was a safe haven, still Contra Costa County. Mm-hmm. Dude, the house was on the market 3 days. They had like 6 offers and we're all cash. We'll come in 10 grand under asking. They're like, even if you came in 25 grand over asking, we're not going to give you that. We were priced right. Mm-hmm. So I see that happening. Yeah. But in the Sac Valley, Sacramento, Placer County, okay, El Dorado County, mainly Sacramento County. Yeah. Can you give us one tip aside from price negotiating and asking for a seller credit to get affordability in place? What else are you doing right now to help your buyers win?
I'm actually having them consult with you and to really know what their affordability is, and then using that to kind of, let's say manipulate, but use that in negotiations with the seller to say, hey, you know what, my buyer's price sensitive, but we're going to need to knock down the price and we're going to be asking for a credit. So the combination of those two is really saving the buyers a lot of money right now.
This might sound rehearsed, and we shoot these live. Did we practice this at all?
Not at all.
Matt, did we practice this at all?
No way.
Okay, so check this out. I know you said that because we could volley back and forth with one another. But this time I really want you to talk about something. He hates exposing his secrets, and that's what I want to do. I want him to expose his secret right now. Okay, so David, we had a buyer. They ran through inspections. Mm-hmm. When they did their inspections, you came back to the seller and you said, this is material fact that either you didn't disclose or, you're literally using every bit of the car contract, the purchase agreement, against them.
Right.
Is that because we're seeing less agents out there because it got harder, and the agents that we are seeing out there are either extremely professional or they're like onesie twosies? Like, how are you able to use that contract and that inspection report? Because I saw this fun fact the other day. It's not so fun. 75% of homes that are resale on the market in California were built before 2000.
Yeah.
That 2000 is when I graduated high school. That was 25 years ago. Yeah. Okay, almost 26 years ago. These houses, I say that with a grain of salt, but like roofs, general wear and tear, the pool refinishing, like there's issues on it, right? You got a renovation client approved, and then you got the inspection and you came back. Can you share a little bit about that?
Yeah. So, knowing what the material fact is and then the seller's not disclosing, just using that to our advantage to say, you know what, you didn't disclose this. So either you have to redo your disclosures, which gives us more time to review it and, back out if they don't agree to our terms, or kind of using that as leverage to say, you know what, we'll overlook that. Obviously we'll still need some updated disclosures, but we're going to need a little bit more credit or, another price reduction. And then that kind of, I don't say that it holds the seller at ransom, but it really does allow our buyers to have a lot more leverage in the purchase.
I liked how you used that on that transaction. Yeah. By the way, I wasn't part of that transaction. I wasn't the lender on it. They used some bank out of the Midwest. But what I liked about that was, you came back to them and said, "Hey, don't want to take our offer. We can go ahead and cancel right now, but you'll now have to disclose what you have now as knowledge." Now, if there's any professionals watching this, another realtor, another lender, which happens all the time, this isn't shady. This is, as a seller's agent, you're supposed to have that seller, you should do it with them, right? The TDS and the SPQ, the seller's property questionnaire, and the TDS stands for the
TDS is the transfer disclosure.
Transfer disclosure. This has This has like a series of questions on it of everything that the seller has knowledge on. I've seen these completely filled out in perfect, like in such great detail, fully disclosing everything they know about the home. Oh, you know what? There was mold. We used a mold abatement company or a remediation company. Here's the phone number. I've seen people write. I've seen sellers write. Seller has no knowledge on every question. You have no knowledge, yet you've lived there 20 years. Okay, is the pool working? I have no knowledge. Is the plumbing in good shape? I have no knowledge. Like, you can't do that. And then if you do that and you expect to get in a contract because you're selling the home and the buyer does their due diligence and does inspections and runs inspections, roof, pest, everything, and then comes back and says, "Here's what we found. What do you want to do about it?" Like, that's fair. That's how a transaction's supposed to be done, right? You're just not used to it anymore because you guys are so used to quick closings and multiple offers and sign in the ground and it's sold. It ain't that market anymore. You need to do better. Any last messages? If I had one last message for anybody watching this, don't be scared to buy right now. This is probably a perfect storm. Like that movie with Mark Wahlberg and George Clooney, this is probably a perfect storm right now. Sellers have no real knowledge of what rates are doing unless they're watching videos like this. Listing agents that are representing their sellers have racked up days are getting nervous, right? Because there's still psychology of the last 6 years of quick sales. And then an educated buyer is coming in and going, okay, I like the fact that it's worth $500. I'm offering $465. And by the way, I need $12,000 to make my rate that's already in the upper fours go down to the low fours. Right. That's my message. Anything you got to say?
Just take the knowledge that, little nuggets that we've kind of discussed here, use that and interview your agent. Make sure that they're knowledgeable of what the market's doing right now, because I don't want to, talk bad about other agents, but a lot of them are not knowledgeable of what's going on. They're still kind of stuck in that 2-3 years ago where it's a quick sale even for a buyer, just give them whatever the seller wants and, that way you can get the deal. But really ask those tough questions to your agent to make sure that they're the right fit for you and your lender as well.
There you have it. This is your August market update. We thank you for tuning in. Please share and forward this to anybody that you feel that can find benefit from it. Till next time.